Linea Crypto Burn Explained. How the Linea burn mechanism works. Disclaimer. This video is for educational and informational purposes only. I am not a financial advisor or licensed investment professional. Nothing in this video should be considered financial advice. Always do your own research before making any investment decision. What if a very low Linea price could actually make its burn mechanism more powerful? That sounds strange. Normally, cryptocurrency investors want the price of their investment to increase immediately. But Linea has an interesting tokenomics mechanism. And when I started doing the calculations, I noticed something. At $0.0025 per Linea, $100,000 could theoretically buy 40 million Linea. But at 25 cents per Linea, the same $100,000 could buy only 400,000 Linea. That's a 100 times difference. So today I want to explain why Linea staying inexpensive for some time could potentially have an interesting effect on its future supply. Welcome back to TheAbrahamCryptoLand, crypto risk management and long-term investing. In my previous video, I looked at Linea's total supply. There are already 124 videos on my channel. Today I want to look at the mechanism behind Linea's burn. Because Linea works differently for many cryptocurrencies. The first thing we need to understand is that transactions on Linea are paid in ETH, not Linea. The network generates transaction fees, but those fees are not simply converted directly into Linea. First, the costs associated with operating the network have to be covered. Only the net economic surplus becomes relevant to the burn mechanism. According to Linea's tokenomics, the mechanism then allocates approximately 20% toward ETH burn and 80% toward Linea buyback and burn. This creates an interesting connection between network usage and Linea token supply. In simple terms, if network usage grows and the economic surplus grows with it, more value could potentially be available for Linea buybacks and burns. Let's look at a simple example. Imagine that eventually there is $1 million available for Linea buyback and burn. At the Linea price of $0.0025, the theoretical purchasing power is $1 million divided by $0.0025, which equals 400 million Linea. Now change the price to $0.025. The same $1 million could theoretically buy 40 million Linea, and at 25 cents it could buy only 4 million Linea. This is why price matters enormously to the number of tokens that can potentially be removed. But I need to make an important distinction. A low Linea price by itself is not positive. Imagine Linea stays around $0.002 for 5 years because nobody uses the network, developers leave, transactions collapse, and network revenue disappears. In that situation, there may not be much economic value available for buyback and burn. So the scenario I'm interested in isn't simply low price. It's low price plus increasing network activity. That's completely different. Imagine 2026. Linea remains around a few thousandths of a dollar, but transactions begin increasing. Then 2027. Transactions increase further, network fees increase, net revenue potentially increases, burn potentially increases, but the token remains relatively inexpensive. This could allow the burn mechanism to remove a relatively large number of tokens. Then imagine 2028. Public interest finally starts accelerating. More people begin searching for Linea, trading volume increases, and only later does the price react strongly. From a tokenomics perspective, that sequence could potentially be more interesting than Linea immediately increasing 100 times. Why? Because tokens burned at $0.0025 are gone. If Linea eventually costs 10 cents, previously burned tokens don't suddenly return. That's why I believe the period before any potential large price increase could be more interesting than the increase itself. I'm going to monitor several numbers: Linea price, network fees, Linea burned, and total supply. If the price stays relatively low while network activity, economic surplus and burn begin increasing, that would strengthen my point of view. If network activity falls and burn becomes insignificant, it would weaken it. So when someone asks me, is a low Linea price bad? My answer is, it depends. Low price with collapsing adoption? Bad. Low price while the network is quietly growing and the burn mechanism is becoming economically stronger? Potentially very interesting. In my next video, I'm going to take the network activity I'm currently observing and build several scenarios through 2029. If you're following Linea, subscribe and follow the numbers with me.